Is there a new king in Canadian banking? Examining EQ Bank as an investment. Ever since the 2008 financial crisis, the bigwigs of Canadian banking, RBC, TD, Scotia, have felt untouchable. They've been the steady eddies, the reliable choices. But what if I told you there's a new player in town, shaking things up and maybe, just maybe, offering a hotter investment opportunity? That's right, I'm talking about EQ Bank, or Equitable Group Incorporated, EQB, on the Toronto Stock Exchange. They're the brash upstart, the challenger brand, all digital and millennial friendly. So, the question is, can EQ Bank disrupt the establishment and become a winning addition to your portfolio, or is it a risky bet? Let's dive deep. First, we need to understand EQ Bank's story. They started in 1990, but really hit their stride in the last decade with a focus on online banking and high-interest savings accounts. They built a reputation for being innovative and customer-centric. Now, here's the exciting part. EQ Bank is growing fast. Like, really fast. They're snapping up new customers at an impressive rate, and their loan portfolio is expanding. This kind of growth is exactly what investors love to see. But hold on a second, because growth isn't everything. We need to weigh the risks. EQ Bank is still small compared to the big banks. They haven't been around through a major economic downturn. The question is, can they handle a recession? Here's where things get interesting. EQ Bank's focus on online banking might actually be an advantage in tough times. People tend to tighten their belts and move their money online during recessions. EQ Bank could be perfectly positioned to benefit. Another factor to consider is EQ Bank's loan portfolio. They're not just offering high-interest savings accounts anymore. They're venturing into mortgages and commercial loans. This can be a double-edged sword. While it offers potentially higher returns, it also exposes them to greater risk if borrowers default. So, what do the analysts say? Well, it's a mixed bag. Some see EQ Bank as a strong buy, a future leader in Canadian banking. Others are more cautious, advising a wait-and-see approach. Ultimately, the decision of whether or not to invest in EQ Bank is up to you. Here's what you need to consider. Risk tolerance. Are you comfortable with a volatile stock? EQ Bank has the potential for higher rewards, but also higher risks. Investment goals. Are you looking for a long-term hold or a quick trade? EQ Bank might be a better long-term play given its growth potential. Portfolio diversification. Do you already have exposure to the financial sector? If so, EQ Bank might be a redundant addition. Here's the bottom line. EQ Bank is an intriguing company with a strong growth story. They're challenging the status quo in Canadian banking, and that can be exciting for investors. But it's important to remember that they're still a young company with inherent risks. Do your research, understand your own risk tolerance, and make an informed decision. EQ Bank could be a great addition to your portfolio, but it's not a slam dunk. With that said, thanks for watching, and until next time.